What are the charts telling you that the market is expecting in regards to the Fed?
We have pretty widespread breakouts in the US indices. In fact, the Russell 2000 index, for one, I know it's been very topical of the last couple of days because it's really run up to new all-time highs. And with that, it has the potential to confirm a breakout from a long-term trading range. So that's what everybody's talking about on the technical front. But also we had already breakouts in the S&P 500, the NASDAQ 100, the Dow Industrials. And breakouts have been working really well in this tape, meaning that they tend to see pretty immediate upside follow through. So with that, we are bullish here in the short term. We also are in this period that has positive seasonal influences, usually that they carry the market through almost all the way to year end typically. So we have a very positive setup coming into today's meeting.
Very interesting. What sectors are indicated to continue with strength going forward when it seemed like for a while almost everything was working? Is that going to be the case, or do we need to be more discerning, as I discussed with the guest earlier in the show, in your opinion?
Well, I think we have to differentiate between market participation or breadth and market leadership. The breadth has been really very strong behind the market. I think that would surprise some folks, but you can see that even with that Russell 2000 index potentially breaking out, that's a very broad index. That means a lot of stocks are going up on up days. It doesn't necessarily mean that all of these stocks are exhibiting upside leadership. However, the leadership is where you're getting that relative performance, and that's what we try to evaluate every day on the sector front. We currently are overweight technology, consumer discretionary, and financials, with the assumption that 10-year Treasury yields will resume higher in the next week or two. So to us, those are the leading sectors. That's where it will be probably easiest to find the breakouts that are actionable from a bottom-up perspective. But it doesn't mean that you won't get that broad participation, and that should make it a little bit easier to take advantage of this up move.
I know that some of the investor sentiment indicators were showing a little bit of weakness, where at least some of the market participants were not feeling as positive, perhaps, as they have in the past going forward into the end of the year. Are you seeing any of that play out beyond just the consumer sentiment charts or at all?
You know, it's funny, my sentiment gauges are really very much neutral, which is
Okay.
somewhat surprising with the major indices at new highs. Typically, you'd have at least some kind of overbought indication from them. And we just don't have that at this time. My sentiment gauges are things like the CBOE volatility index, the VIX.
Right.
VIX has been range bound for some time, and while it's near its lows, it doesn't have any indication that a volatility spike is imminent. So I'd say, if anything, sentiment data from a technical perspective is more conducive to upside than not. However, we do think that sentiment will likely become an issue if we do see that upside follow through, setting us up for some kind of corrective price action that would be more significant in Q1. We also have some indications on our long-term charts that a comparison to late 2017 may be fair for the S&P 500. And if you recall, 2018 was somewhat of a difficult year, more range bound, but with a lot of volatility.